This was the week where the death spiral kicked into a much higher gear. The more Bitcoin goes down, the more stretch goes down, the more strategy goes down, the more losses investors have, which means the more investors who file lawsuits. And the lawsuits are for more and more money. You're going to have tens of billions of dollars that strategy is going to owe investors in these class action lawsuits. 3 weeks ago, on June 5th, I did a podcast from my boat. And the title of that podcast was The Death Spiral Has Begun. And the death spiral referred to shares of strategy. And the reason I believe that strategy was entering a death spiral was because the share price of their flagship preferred stock, Stretch, STRC is the ticker symbol, had broken below 100, which was the par value of the shares. The marketing strategy behind Stretch since the inception, because I called it a Ponzi scheme, which is exactly what it is, because the mechanism for paying the dividend, the 11.5% coupon or preferred dividend, was not the income being generated by Strategy as an operating company, because Strategy didn't generate any income. It was really losing money. There's a tiny software business beneath a pile of Bitcoin. With Saylor, they didn't even have a pretense. They came right out and told you it was a Ponzi, except they told you in the fine print of the prospectus, because all of their marketing material, everything that they used to promote Stretch, didn't mention all the risks in the fine print in the prospectus. It just said that this is safe. This is for retirees. You're going to get 11% a year. We've stripped out the volatility. So if you want risk and you could take volatility, buy Bitcoin, buy a Strategy Common. If you don't want the risk, if you don't have the stomach for the downside, then buy Stretch and just live off this great 11% yield. It's better than a bank, better than a CD. It's better than a bond. So I called that out as BS the minute I heard it. The money that Strategy was counting on to pay the dividend obligations to the preferred was going to come from selling more preferreds. That Saylor would keep on issuing through Strategy more preferred stock. And as it raised money, it would use some of that money to pay the dividends on the preferred, and it would use the rest of it to buy more Bitcoin. And it would keep on doing that, growing its Bitcoin per share and raising the money by selling Stretch. And the reason that Saylor claimed that he could do this, that he could afford to pay 11.5%, was that Bitcoin was going to appreciate by 30% a year. And because Bitcoin goes up by 30% a year, he can afford to give the first 11.5% to Stretch and take out all of the volatility. So that there were two securities, one Stretch, no volatility, $100 price, 11.5% yield, and then common stock, Strategy shares, no yield, but the rest of the upside. Strategy was going to get the other 20% plus, giving the first 10% to Stretch. Now I said, look, this is ridiculous. Bitcoin's not going to go up 30% a year. There's nothing you could base that on other than looking at the return from inception when Bitcoin started at nothing. But the most recent 5-year period, Bitcoin has gone sideways. There have been no returns. In fact, Bitcoin today, and it closed just below 60,000, is lower than it was in April of 2021. And its high that year was in November of 2021, but we're lower than that too, obviously. So you have 5 years where Bitcoin has gone down. So how can you say that it's going to go up 30% a year when recent history doesn't bear that out? But anyway, the entire premise was built on this fantasy, but the funding mechanism where you get the money to pay old investors by selling stock to new investors, that's a classic Ponzi scheme. And I called Stretch a Ponzi from day one. And the main reason people argued with me and claimed that it wasn't a Ponzi was because Saylor was acknowledging that. He was admitting that that was how the money was being raised. Now, he didn't call it a Ponzi. He just described a funding mechanism that is exactly a Ponzi.
Strategy and Stretch are in a death spiral. Michael Saylor's Ponzi scheme is collapsing. Bitcoin down 8%, Strategy down 30% in 1 week, Stretch down 18% in 1 week. The lawsuits are coming. Tens of billions in liabilities. Strategy will go bankrupt. Bitcoin will crash further. Gold and silver bottomed this week. Gold below $4,000, silver below $60, both oversold. The Fed is lying about inflation. Warsh is not a hawk, he's all talk. The Fed will choose inflation over recession. Sell crypto, buy gold and silver. Greenspan is dead. His legacy of inflation lives on.
It was gold itself. Real gold also went down quite a bit. In fact, gold this week traded below 4,000. The low on gold was $3,970. Now, we didn't close below 4,000. We had a little bit of a recovery the past couple of days. So all of that decline took place Monday through Wednesday. That's how bad it was. Gold closed today up about $62 at $4,088.60. Silver down even more. In fact, silver dropped 11.3% on the week, but it closed significantly off the low. Silver got as low as $55.99, so a penny below 56. It closed at 59.05, so still below 60, but it was a big shakeout in gold and silver. I think we hit a lot of stops because I think some people might have had stops not just below the low, but below 4,000. And when gold was below 4,000, and it spent 2 days during the week where it traded below 4,000, Wednesday and Thursday, sentiment got very, very negative on gold. And it's as oversold as it's been in many, many years. In fact, I think it's more oversold now than it was overbought when it was at 5,600. So I think that negative sentiment hitting those stops, there's a good chance that that's been it, that's the bottom of this decline. Silver, never got back down to 50. I don't expect it to get down to 50. And honestly, I didn't think it would get this low, but it did. But given the context of the bull market, $59 silver compared to where it was a year ago, this is a huge bull market. It is a big breakout. Yes, silver is down more than 50% from its peak, but it tripled before the drop. So silver went on a rally that I've never seen in my career, where in a very short period of time, it went from 30 to 120. But the more recent next leg down was all about Kevin Warsh and the perception that he's some uber hawk, that he's the reincarnation of Paul Volcker. He is not. And all this talk, all this tough talk is just talk. I don't know if the Fed is going to raise rates at all. The market is now pricing in 2 or 3 rate hikes, but they're quarter point rate hikes. Even if we get them, they're too little too late to actually bring inflation down to 2%. They need much more aggressive interest rates, which are not going to happen. But I don't even know if these hikes are going to happen. Because if the Fed really was going to hike rates, why didn't they do it at the last meeting? They had plenty of opportunity. No, what did they do? They established not committees, task force, to have 5 task force now to study. So they may not do anything until they get the recommendation of these task forces. And by the way, the longer they wait to hike rates, the less likely they are to do it. They might actually cut. And it's not going to be because inflation is coming down. That ain't going to happen. Inflation is going up. If they cut, it's because the economy is weak. It's because the stock market, the real estate market are weak. It's because bond market might be weak. That's why they're going to cut. They're going to cut despite inflation going up. In fact, look at the news that we got this week on consumer electronics. Big price increases from Apple on the iPhone, on iPad. I know Microsoft really jacked up the price of the Xbox. These are the biggest price increases percentage-wise. And it got a lot bigger this week, but it got bigger in the weeks prior. because Bitcoin was going up and strategy was not. It actually moved down a little bit, but down 30% this week. Stretch, which was only down about 6% when I recorded that video and said, that's it, the death spiral has started, it dropped another 18% this week. 18%, more than Bitcoin. Bitcoin only fell 8.3% this week, and strategy fell 18. Michael Saylor told people that strategy didn't have any volatility, that was stripped out. The reason these stocks cratered this week is because Bitcoin stopped going up and started going down. Now, the low for the day on Stretch, believe it or not, was 71 and a quarter. That's a 28.75% drop. Somebody sold it down there, and that person might have bought it at 100 a few weeks ago. And now they've lost 28% of their money. That's more than 2 years of dividend income. So some conservative retiree who bought into this nonsense, who wanted the 11%, buys this a month ago. Maybe he's got one dividend now. They pay every 2 weeks now. So you probably got a couple of small dividends. But now he's lost over 2 years worth of dividends. In fact, if you don't sell and you own the stock right now, it's going to take you 2 years of collecting those dividends to get your money back, to get even if you want to sell. The minute you do that, I knew that shares of Stretch were going to start to fall. And it was going to be a loop. It was going to be a death spiral, because the more Stretch went down, the more people were going to sell it, because now they're losing money. And now that puts more pressure to raise the yield, which he can't do, but he has to keep buying Bitcoin, and he can't sell Stretch. But now he can't buy Bitcoin. So now Bitcoin's going to go down because the biggest buyer is sidelined. And of course, then he's going to have to sell Bitcoin. And we know he can't sell Bitcoin. He tried to sell 32 Bitcoin, and the market collapsed. I think it was yesterday. A law firm came out and said, yep, we're organizing a class action lawsuit against strategy. And I expect more lawyers, to come up, because whenever people lose a lot of money, it's like, sharks smelling blood. They all come running. This is a slam dunk. This is an easy to win case, as long as it's framed properly, as long as the plaintiffs agree they bought it because of the representations made by Saylor. It was Saylor that convinced me to do it. It was his statements. That's why I bought. You're going to win. And so what are the opportunities that people have who are still in Bitcoin or in strategy or Stretch? You can sell, and then you could take your money and you can buy gold and silver that have also gone down, because Bitcoin's not going back up to make a new high at 120,000 from 60,000, but silver can easily go from $60 to $120. So you'll make your money back. Even if you bought Bitcoin at 120,000, you don't have to make that money back in Bitcoin. You can get out of Bitcoin, take a tax loss, put that in your pocket, and maybe even file a lawsuit. If you just bought Bitcoin, I don't know, but if you bought strategy, you can. But you take your tax loss, and now you buy some silver. And when silver doubles back to its old high, now you're even, right? Instead of losing more money. And I don't think silver is going to stop there. I think silver's got a long way to go. I think 120 will just be a stop on the way to 200 over time. So you can make back your losses from crypto and fool's gold by getting into the real thing. Couple of other points I want to make on today's podcast. Oh, one Bitcoin related too. I was listening to interviews with Grant Cardone, who's a real estate guy who now became a Bitcoin guy. And he has these real estate funds that now have Bitcoin. So when you send him money, you get real estate and Bitcoin at the same time. And he concocted an explanation as to why this is some disruptive, revolutionary thing that is solving this problem that REITs have. And he said the problem that REITs have is that they have to distribute almost all their income. And because they do that, they don't have money left over, to cover operating costs like maintenance or repairs or things like that, because you just can't go sell your real estate And so by having Bitcoin in there, you now have some Bitcoin and you can sell the Bitcoin to cover your expenses. And so this is some revolutionary concept that he thinks is going to, take over the real estate market, which is absurd. Why the hell would you need Bitcoin with real estate? I mean, if you want to buy Bitcoin, buy Bitcoin. If you want to buy real estate, buy real estate. There's no reason to buy them both in the same product and now pay Grant Cardone a management fee to manage your Bitcoin. Bitcoin doesn't need to be managed. Just store it, right? But he is solving a problem that does not exist. I mean, he ought to know better. He's a real estate guy, right? He's much more into real estate than I am. REITs earn income on their property, which they distribute because they earn rents, but they pay their operating expenses out of their income before they distribute it. It's a deduction. So to the extent that a real estate fund has maintenance and repair bills, it pays those bills out of its rents. And then what's left over is taxable income. The rent, the repairs and the maintenance, property taxes, whatever, those are all deductions from the income. What's left over gets distributed. You don't need Bitcoin. And of course, even if you want to do some other capital improvements, they still have a lot of cash that they don't have to distribute because they get to depreciate their property. Depreciation is a non-cash expense that reduces your taxable income. That's the beauty of real estate. You get a lot of income that's not really taxed because it's offset by depreciation. So the REITs are doing the same thing. So the cash that they don't have to distribute, they can make capital investments. He said that REITs can't make capital investments. It's been a problem, and now he's solved it with Bitcoin. He hasn't solved the problem for REITs. He created a problem where no problem existed because now his REITs are going to have the problem of losing money on Bitcoin because that's all they're going to do.